Hey, everybody, and welcome to Ticker Talk for Wednesday, January 25th. As I'm sure you all know by now, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. If you're watching the recording, please go ahead and smash that like button. And we are going to get right into this. So first thing we're going to do is we're going to start by taking a look at the market. We'll quickly go through the major indices. We'll look at some of the sectors. We won't look at all of them today. And we'll see if any of the setups that we were looking at in the weekend video, we'll see if anything's happening there. And then we'll get into looking at some other tickers as well. So it should be a fun session, and we'll get rolling on that right now. So let's start with taking a look at the SPY. When I look at these index charts, I can't help but get excited. So here we are in the SPY, of course. Everybody's familiar with this downtrend we're in, with the big, this trend line should be really familiar to everybody. I mean, everybody's kind of talking about it. The 200-day moving average in orange here. So let's zoom in a little bit. I've pointed this out before, but I kind of want to point out this, this giant head and shoulders kind of bottom sort of pattern here. It's not great, but it's there. Okay, so we've got all of that going on. We've built this great big base, or not a great big base, but a really nice base here. We'd come out of it, came up towards the downtrend line and the 200-day moving average, and we failed, but we really only failed there for a day, right? And when we had this big red down day, we had a gap down day, and then we had this little tiny indecisive candle, little doji here, followed by a couple of big green candles right into that trend line. And ever since, we have been butting up against it. And, you can notice that yesterday, we gapped down a little bit, but then we had an inside day. And that's pretty bullish, right? Now, today's gap down was not bullish at all. This actually scared me quite a bit this morning. I thought, oh, geez, we're just going to give it all up. We've done so much work up here, and it really looked this morning, it looked very bearish this morning. But, we opened above the 200-day moving average. We came down. Look what we came down to, the 50 and the 21-day moving averages here. And I actually said in the Discord, I called out potential bottom. I said, this looks like a capitulation bottom here. And in the SPY, I'll show you what it looked like in the SPY, although it was much better in the IWM. And it was the IWM that really sort of maybe, think that, okay, I need to call this out to everybody in the Discord. So let's just look at the intraday chart here. And you can see where I called this out. Now, I called this out here at about between 9:55 and 10 o'clock. So on this red candle here, and I guess actually probably the beginning of the formation, it would have been around 10, maybe 10:01. The beginning of the formation of this green candle, but it was right down in here. And I just thought, I saw this, this was, we were red, lots of volume. And I would have actually at that time of day as well been looking at a 1-minute chart. Possibly 2-minute chart. Okay, yeah. So we're coming down in here, and I was watching the 1-minute chart, and I just sort of saw this, it lost some momentum to the downside, and the volume started to drop off. So we had this big building of volume here, and then we had a loss of momentum, volume dropping off, and then we started having green candles. And and then we started to turn up, and I called it out. Hey, this looks like capitulation. This could be a bottom. So we go back to a 5-minute chart here. It's kind of easier to see right there in the 5. Now, it didn't actually turn out to be the bottom. We did roll over again and put in a very similar kind of pattern right here, and this one was the bottom. But if you look at this on the IWM, it was the bottom at 10 o'clock. Really clean. Nice tweezers pattern here, came up, didn't come back down near it. And when I saw this, when I saw the SPY had come down and below, we'll just go right back to the SPY. When I saw that the SPY had undercut that low, which would be right here, right? I was a little concerned. But then when I looked over to the IWM, and I thought, oh, we're nowhere near that low. This is great. And the same goes for the Qs at that point in time. The Qs did very similar. So this is your 10 o'clock candle here. The bounce in the Qs was nowhere near as weak, but we didn't undercut it anywhere near as much as the SPY did. This was all very interesting price action here, and really made me think, okay, you know what? We're going to recover from this. This is not going to be so bad after all. So that was my thinking at the time. Let's go back to our daily chart. And again, just to remind you, come down through the 200-day moving average down to almost touch the 50 and the 21-day moving average there, get near that gap, and then go right back up. And look where we closed. Right up on the highs, right where on this trend line and where the body of all these other candles is. This is a beautiful setup for breaking out of here and really making a nice run. Now there's a lot going on, the rest of the week. We've got some macro data coming the rest of the week. Obviously, we've got lots of earnings. And we may take a look at some of those stocks, for instance, like Tesla. I think we have to look at Tesla today because they reported, and I think around the call now and doing well. I see in the futures, the markets are up a little bit. The NASDAQ is up. So this is a futures chart right here, and you can see. So that was our candle today on the futures chart. You can see that looks, because of the timing of futures and everything, that looks quite a bit different. This is the new candle here. So you can see that we're up a little bit in the futures. The NASDAQ did pull off after the close, after the equity trading hours close. The NASDAQ did pull back a little bit, but you can see we're bouncing up now. So this is all good stuff. Okay, let's take a look at the NASDAQ, the QQQs. We can see very similar price action here. Didn't quite hit the 200-day moving average or that trend line yet, but it's got that same sort of bull flag looking pattern. I mean, it's only a couple days long, so it's hard to call that a bull flag just yet. But it's if we can cut through here with a little bit of momentum, I think we might be able to get through this trend line. It'll be interesting because if the NASDAQ breaks through here, the S&P 500 will have already broken through its downtrend line and be on its way, and that I think should give the NASDAQ enough momentum to break through this. So really interesting stuff going on here. If we look at IWM, I mean, it looks even better in IWM right now. Look at it. We've got this major resistance going on right here, and we keep butting up against it. And the more we butt up against this, the more likely it is that we're going to break through. So this is all very hopeful to me. We've got we've got a bit of a head and shoulders pattern going on in this one as well. So we have this would be your shoulder right here. I'm gonna actually here do it like that, and then obviously this is your head. Okay, and then you've got another shoulder here. Now, here, this would be a continuation pattern, continuation of this move up, right? You do get these as continuation patterns. This is exactly what they look like. This is a really good example of it. And then we would move to the upside. We do the same measurement on it, measure from here to here, and that is going to take us, where would that take us to? Let's just really quickly do a measurement from here to here. And so that's about 10%. And look at that. That almost exactly takes us up to that next area of major resistance. Makes perfect sense. This is what I think is going to happen, or at least this is what the chart is telling us is going to happen. We've got positive price action in here. The bears have tried to push this market down a number of times over the last week and a half and been completely unsuccessful. The bulls have come back every single time and pushed it back up. It's only a matter of time until we get through here. It might not be tomorrow, or it might not be on Friday, Maybe we consolidate here for a couple of days, but it's just looking at this, I would be shocked if we don't break through here. That being said, if we don't break through, if we really start to pull back, it's going to catch a lot of people, myself included, off guard, and that could turn into really strong, fast selling. I don't think that's what's going to happen. I think that's the low probability outcome. I think the high probability outcome is we break through this, and we break through it strongly, and we break through it soon. So that's where we are in the major indices. Let's take a look at the volatility index. You can see volatility index is hanging out near these recent lows. It's great, exactly what we want to see. After that move up, you know, it kind of went back up. It went up at the apex of this triangle that it broke out of and turned right back around just like it's supposed to. Very technically well behaved here. And, you know, we'll probably see this come down a little more. I'd be surprised if we get much below or get below 18, really. I think that even if the market is moving up, you know, volatility is the decline in volatility is going to slow, and we're going to see some, you know, consolidation probably around this 18 area. The 10-year yield. This is still basing here, still kind of in this consolidation. That's fine. I think all the pressure has come off of markets with regard to bond yields. We're shifting away from fearing inflation, fearing higher rates, and moving into a regime where we're fearing recession. Okay, so let's take a look at the dollar index. And you can see the dollar index was put in a consolidation here. You could certainly call this a bear flag, and we broke down out of that today. Now there is another kind of this really kind of two sets of lows here in this bear flag. So let's draw. You know, we've got kind of another bit of a bottom there, so it hasn't totally broken down out of it. But you can see now, and whereas before we had some wicks down below that first orange line there, you know, now we've got the whole body of this candle is below that. So yeah, this looks like you know, continued move to the downside, which is good for international markets that I've been pitching at you guys. It's good for U.S. equity markets. All right. We'll save the international markets for the weekend. We'll take a look at the at gold really quickly here, because it continues to grind up. Yeah, this is just sort of a just doesn't stop. What can I say? You know, it's in a beautiful uptrend here. Hugging this nine-day exponential moving average just beautifully. If you're in it, awesome. If you're not in it, such a hard thing to get into, right? But you know, if you want to get in gold, watch for a pullback. Pullback maybe to the 21-day moving average, probably be a buy. Not investment advice, by the way. How are the miners doing? Look at GDX. Take a look at the gold miners. Aha, this is really interesting. Okay, so I mentioned this consolidation in the last couple of weekend videos. I'm not sure why I don't have that drawn in as like a base, because it's definitely a base there. You can see it tried to poke its head out well over a week ago, and is now in the last 2 days broken out of there. Come right into this old gap. Interesting. I think, you know, given the gold is going higher, I think this is going to go higher into the gap. But this is potential resistance that it's come into right now. So this is definitely worth keeping an eye on here. Let's take a look at silver. Silver is still kind of volatile in this consolidation. Did poke out. It was quite weak. What was that? 3 days ago. And dropped right down hard to the 50-day moving average and bounced right back up and is back into the consolidation. Maybe this is the one kind of last fake out here out of the bottom of this before this can move higher now and break out the top of this consolidation. What else? I don't think there was much going on in copper. Yeah, okay, so it's maybe building a bit of a base on base, higher base perhaps. Not terribly exciting though, but I mean, it's good to see that this is not going down either. The overall commodities ETF, nothing really to see there. How about crude oil? Okay, so we've been moving up. Momentum totally slowed. Not surprising, as it came in a major resistance area here. We've got that declining 100-day moving average overhead. But we've got a bunch of moving averages below that seem to be supporting it. So I think it just needs a little more time here to consolidate before breaking out higher. Nat gas, on the other hand, though, it's had a couple of really nasty down days, and that's affected one of the stocks that I recommended over the weekend. That's BRI or BIR on the Toronto index, which is BIREF over the counter in the US. Yeah, unfortunately, it's got a lot of gas exposure. So when we look at that chart later on, you'll see that it looks like this with a couple of red days, unfortunately, since a number of us entered it. But we've got to expect volatility if we're going to be playing in the oil and gas space. XLE, the energy ETF, still looking good, building a little bit of a base here. Still very near the highs. Still looking very healthy. XOP, oil producers and explorers, not looking quite as good, but not looking unhealthy either. Oil services ETF, quite strong, really strong candle today. Probably going to go up and attack. Oops, let's get a new all-time high there. Looks like it's going to want to go up and attack that new all-time or that all-time high. And I need to draw in this level around here. Yeah, it comes off of that, doesn't it? Very nice. Okay. Things looking good as long as we're above this, 312.50 area. This looks like it's going higher. Let's see. I'm not going to look at the individual names. We'll save that for the weekend. I'm not going to look at solar because there's nothing going on there right now. Let's take a look at some of our sectors. Consumer discretionary. On that pullback a little bit and is moving up again. Drawing some minor resistance below this trend line. Draw that in here. This looks ready to break out of this tomorrow. Because I suspect the market's going to be strong tomorrow. So I think we see a breakout out of that. Industrials, these have been taking a little bit of a breather. You can see here, right around a resistance level. I think that the excitement's going to be in other areas, not in industrials right now, probably not in financials either, although these probably will grind up. Actually, financials technically looking ready to break out, aren't they? That's quite interesting. That surprises me a little bit that they are looking this nice, this ready to go, kind of like IWM. Technology. This is where we want to see, some really nice setups. So you can see we've got this downtrend. We broke through the first downtrend line. We've now got another downtrend line just overhead. We're now through and closed above. This is 3 closes in a row above that declining 200-day moving average. That's pretty bullish. We just need to get through this little trend line and get through that gap there. And, it shouldn't be hard to do. I really think that bulls can get it together here and push this higher. Communication sector. Little consolidation right under the 200-day moving average, right under that gap. I like the consolidations as they get ready to get through major resistance, and that's what's going on right now. Okay, I guess we'll look at some of the FAANGs. Some of them have had earnings, some of them have earnings coming up. Meta has earnings, I believe it's next week, February 1. What is that, Wednesday of next week, I think? So probably not going to see much more out of Meta now. Probably like some sideways action. Even if the market's moving, I think this may underperform, because it's getting so close to earnings. Apple, So Apple butting right up onto its downtrend line, and again looking ready to break through that. I mean, is everybody seeing all these setups? It's so many individual stocks. We've got sectors setting up like this. We've got individual stocks setting up like this. Like I said earlier, it's gonna explode, I think, or it's gonna shock all the bears with a brutal move to the downside. I really think there's only two ways that this can go, and it's going to be fast, strong moves in either direction. But again, like I said, the high probability of a move to the upside, low probability to the downside. Amazon. Not looking as great as others, but there's definitely a bull flag here. It's a little volatile inside that flag for my liking. However, given the giant gap down today and right into the 50 and 21-day moving average, and then the recovery from that, very bullish price action. You know, not on the down move, but the recovery, very bullish. Again, we could, see a break from this flag and a move up to at least up in this gap. And if the market's really strong, then in a couple of days, right through that gap. Netflix. All right, continues to grind higher after breaking through that major resistance. Google. When are they reporting? They're on the 2nd. Okay, so the 2nd, I think that's next Thursday. Interesting to see that Google didn't recover as nicely. This does not look as good as most other indices, sectors, and stocks. This candle today. That's interesting. So yeah, this is worth keeping an eye on. I mean, maybe people just want to kind of like take their foot off the gas here on Google, go sideways for a bit coming into earnings. I don't want to touch any of this. Microsoft. So Microsoft had earnings yesterday after the close, and really, it was Microsoft is the reason that markets were down this morning. Look at this big gap down in Microsoft, and then continue lower a bit. Interesting that formed a nice little double bottom right there off of that pivot. Let's draw that in to remind us of that next time. Okay, and strong bounce up, really strong. Closed a little off the highs, but it's pretty good, considering that the market was really displeased with Microsoft last night after the conference call, and this morning, very strong price action today. Tesla. So, as I'm sure you're aware, Tesla had earnings after the close. So we're looking at the daily chart, of course. So this is the context of what we're looking at. That downtrend line that so many stocks have, right up against it. And I think we're breaking through this right now. We'll have to look at the intraday chart to get our after hours up. Look at that. Tesla bulls gotta like this price action. So here you can see we're looking at a 5-minute chart. We shot up initially on the earnings and then pulled back really hard. And it was back in here, I think, when I can't see what time that is. But I was mentioning in the Discord, that I think that, in the call, Elon can get this back. And it sure looks like he did in the call. And the market has been liking that ever since. Just stepping up, stepping higher, stepping higher, stepping higher. So where does that put us? It puts us at 152. It's not a bad move. That's where do we close? Around 144, $8. That's all right. That's a decent move here. What is that going to be? That's I can usually do these percentages in my head, but yeah, okay, 5%. That's all right. And I bet you there's more in this. I wouldn't be at all surprised to see this continue higher tomorrow. So let's go back to the daily, see what that looks like on a daily chart. 152. It's right at this little resist. No, it's up at the the 50-day moving average. That's a logical place for it to stall out, catch its breath a little bit. Maybe it hangs out there overnight, and we'll see what happens in the pre-market. But I'd be really surprised if they don't push this a little higher in the pre-market tomorrow. I could see this moving up into this 161, even maybe up into 167 area if it's got some momentum over the next few days. Come up to 167. That seems a good place for it to stall out. Maybe turn back down a little bit, consolidate in here, or maybe just go sideways tight under there and then break out higher. I think more likely we turn down a little bit. There'll be a little bit of profit taking, but 150 probably going to act as resistance from here. I got to say, I'm pleasantly surprised about this. I know I've been very bullish or bearish on Tesla lately, but it's proving me wrong, and that's fine. That's fine by me. If Tesla's going up, that's good for the overall market. So congratulations to the Tesla bulls. All right, we got anything going on in semiconductors? Okay, yeah, not bad. They've stepped up. They kind of grindy step up. Haven't been thrilled with these, but yeah, I'll take that price action. Healthcare still in this kind of downward channel, but maybe put in a double bottom here today. Potential double bottom. Have to see. Next couple of days will be important for this. If it can continue higher, if it can get out of this downward channel, if it can get through that resistance right there. How about biotech? Again, yeah, kind of, working slowly, a little bit of a grind. Maybe we've got some horizontal resistance overhead potentially here now. But yeah, I'm fine if this continues to grind higher. That's fine. It doesn't have to go fast. All right, defenses, nothing to see there. How about we quickly go through a couple of the stocks we had looked at over the weekend. We have been looking at, or I've been playing COTY. This is, I can't remember where I entered this. I've been this for a little while now. Did I enter down here? I think, anyway. Nice to see this break out of this base and move higher after giving some of it back today. It took it all back and actually closed higher here. So I think we're going to see more upside on COTY. HIMS, not as good. So we were joking around a little bit. Maybe not joking, but anyway, we were talking in the Discord a little bit how. So I entered. I can't remember if it was on this red candle or the beginning. No, it was the beginning of this green candle. I entered. Yeah, this would have been Monday. Entered a position in here, and yeah, some people were kind of joking around about how nice it was of HIMS to come back for me. Like I kind of thought it would. Got the entry in, and then we had that kind of this candle. This is not a good looking candle here yesterday. After coming up to that high, and then when it gapped down today, not a good looking candle. However, it did come up off the lows, and it closed basically right on the open. So indecisive candle here, which is okay. It's kind of like a consolation prize when you've seen a bit of a move down to get an indecisive candle. This has really got to move up tomorrow, though. If this kind of comes below this level, I think we're going to see lower and maybe even testing these lows. I think I'm probably going to stop out if it breaks down below the low of Monday's candle. Yeah, it's do or die time for HIMS in my opinion. Although I am still quite bullish on this. I just think that if we can't hold this here, it will need to come down here for a little bit and probably consolidate again and then set up again. So if I saw myself out here, I will be keeping a close eye on this, and I will re-enter eventually. So that's HINS. What else is worth? Okay, yeah, Birchcliff Energy is one that we talked about. We were looking for a breakout up here. I did enter this on Monday, and I've been basically taking heat ever since. And it's mostly because of what natural gas is doing. So if we can see a move, if we can see a reversal in natural gas, I will be a very happy guy. Because I'm sure that we will see a reversal in this, or we can see, oil make a strong move. Will be good for this as well. But neither of those things are really happening right now, so we're seeing just a little bit of a pullback here. I'm not really concerned yet because I do expect volatility in this stock. Anything else worth looking at? What did MRVL do? I sort of took my eye off the ball on this one. Okay, yeah, that's right. It gapped. That's why I took my eye off the ball, because it gapped up a whole bunch on Monday and just ran away. This hammer candle here, yeah, it's one of the ones that we talked about on the weekend, Marvin. If it hadn't gapped so much, if it was a smaller gap, maybe half the size, I probably would have jumped in it. But I should have. This is another one of these gap and goes that I missed because I'm so gun shy on the gaps because of the way because of the market the last year, right? And I've missed a few of these, so I think I need to kind of change my opinion on these gaps. It's maybe this is a market where we can chase gaps again. It's certainly starting to look that way. So yeah, if anybody got that, if anybody jumped into that, wasn't afraid of that gap, you're doing all right here. And today, even though it's not in a downtrend, it's another good looking hammer candle. It's got the most volume out of the last couple, yeah, at least it's got more volume than that indecisive candle the previous day. So that does look like it's going higher. That is everything I wanted to show you guys. So it is your turn now. Marvin, Justin, anybody else got anything they want to look at?
I'll yield to Justin first. I don't know. I mean, I've been scanning some stuff, but like I said, I've been paying attention to, I guess, kind of a couple of tech, or one tech stock in particular. But like I said, I can save mine because I've just been practicing my charting. So
cool. Which is that tech stock in particular you
were? Team.
Oh, Atlassian, right?
Yeah. Mm-hmm.
Interesting.
I feel like it's trying to close this gap.
So no doubt you've seen this gap. So the first thing that jumped out at me was that gap. So the gap was there.
Yeah.
And then it closed some of it fairly quickly. It's closed more of it. We've closed more of it. So let's show that as a gap. And obviously now this has become some resistance. Interesting how close it is to here, right?
Yeah.
You know what? I'm going to draw that in as a major resistance, and right off of yeah, I mean, really, what I would actually, I'm going to do this a different way. I'm going to draw it in as a resistance zone. Here we go. And just and then come down and grab those there. That's how I want to look at that one. So this should be pretty strong resistance right here.
Gotcha.
And then of course you've got all these downtrends.
Yeah. It's been like a downtrend.
But I feel like it's like sort of most recent one in first. So you've got that one there, right? And then obviously you've got you know, you can draw something like that, or maybe, you know, maybe you go up to there. But yeah, I don't like that one that much, just because there's so much white space. You know, it's only got 2 touches on price, right?
Right.
That one's not much of a trend. However, that being said, if you know, when price gets up there, you might see a bit of a pause there. It's probably worth having that on your chart.
Hmm.
Anything else you haven't? Well, okay, I guess we got a level right here, right? So,
Yeah.
oh yeah, and that comes from back here.
Hmm. Yeah, that's what I have, and I just feel like at least right here for the past feels like it, gets to what's that? Like right around that it touched like that 112 a couple times around that 112 116, and just I don't know, like, and it's just been holding
Yeah,
and as almost seeming like a double bottom is in terms of trying
really, I
to
mean,
really
really,
push.
it's a triple bottom.
Yeah, triple bottom. Yeah, yeah,
You know, you've got 1, 2, and then came down. Even though it didn't touch it, I mean that is that it didn't touch it is great. You know,
right.
they're front running it. They're like, no, I want to get in this thing now. I'm not going to wait. I'm not going to wait till it gets down there. I want it.
Right, right.
So no, that's strong. Um, so yeah, that's yeah, we got some really good levels on here now. Um, you could maybe draw like a little one off of here too. In fact, I will draw a little one off of there. And that comes from, you know, back in here, right about there.
Yeah.
So that's, you know, that's all our horizontal support and resistance areas, their zones, lines. And now, you know, what is it telling us lately? What is it telling you, Marvin?
Well, I mean, I was like, when I tried it, and it crossed the came up because it crossed the all my did my check boxes for moving averages in terms of the crosses in terms of the EMAs that I look, and then I was like, okay, so and I saw the gap, so I was like, oh, okay, I feel like this is gonna try to at least close this gap and get up into that 190, like 194-ish range, and maybe stall out a little
Right.
bit. But at least I've been looking at. I think I started looking at it. It popped up. When did I first do this? I'm trying to look at my chart, go back and see. And I probably, you know what? I need to start putting dates. That would be helpful. When I'm marking stuff up, so I'll know. But I think I started looking at it. It had to be maybe um right around last week of some sort. I kept seeing it in the uptrend, and I caught it, and I was like, "Oh, this is definitely gonna feel like it's gonna close the gap at least and get up into that
Yep.
194 200 range." And then
Yep.
at that point, but I was like, "But even still, that's a really nice move." If that is the case, to be able to really break through that resistance and then and try to ride through it with it just for a little bit. But
Yeah. I
yeah.
mean, if it did go to 190, you know, I mean, that's $30 from the breakout point.
Hmm.
You know, 15%. That's
Yeah,
that's a decent swing trade, and
yeah,
it
yeah,
probably,
yeah,
because it probably does it in a few days.
yeah, yeah. Like I think the ATR on it is for ATR on it for the past few days. It was like it ranges anywhere between $8 to $10 on the weekly. The ATR for the past few weeks it's been like $26 to $30 or so. So it
Yeah.
likes to move, and that's the other thing that caught my eye. Like it likes to move. It can be it can move, and so but with it putting it in that triple bottom, and then I think when I looked at it on the weekly, I don't know. Like I think I've noticed that for what and I'm not sure if and I'm sure there probably might be some technical term for it, but I don't know. Like whenever the market does big moves like that red candle, it's like the reversal is inevitable of that sometimes. It's like seemingly doesn't like really big moves sometimes, or like certain price action. And so, some movement up as I feel like as we're seeing, to kind of get back at least to the top of that previous big red candle, and then seeing what it does at that point. But those are the kind of things that kind of stood out to me. So
did you yeah, I mean, we shouldn't be surprised. Like this big red candle here, this is a shock to the system, right? There, this is obviously a big fundamental change in the company. It did it on earnings. So it shouldn't surprise us that it consolidates. And when you look at this on a weekly, this consolidation looks nice and clean. And also on the weekly, we've now got 2 weeks of consolidation. We're into our second week of consolidation, up near highs of this larger consolidation. And I mean, that's real. That's a real positive.
Yeah.
So that bodes well for a breakout up there. Did you read the earnings report at all?
I didn't get a chance to read the earnings report because I was quite curious, and it was on my to-do list, and then
yeah,
I know, but yeah, I was quite curious by that, and I need to go.
Even if you're swing trading this, I mean, one of the advantages to being a technical trader and a swing trader is that we don't have to always go and read these reports, right?
Right.
It doesn't hurt either, even if you're swing trading it and you're swing trading it off a technical pattern, because we know here that I'm going to go back to the daily and see exactly where. Well, I mean, we know that the gap was caused by earnings. Right?
Yeah, that was like November 3rd.
Yeah.
It was a big surprise.
And wasn't a surprise though. Look at. I should maybe look at see what the overall market was doing on these days.
Yeah, true. Right, but then you see this is like
it sure looks like somebody knew something, doesn't it?
Right. It was like something's happening, and then boom. So
you know what? When is that? I think that was Halloween, or November 1st was the first day of that. What was the SPY doing on that day?
Let's see, on November.
Oh, okay, yeah. So actually, the market did have a couple of bad days.
Yeah. Yeah.
So we'll give the insiders at team the benefit of the doubt here. But anyway, no, so what I'm getting at is, okay, so it was here before earnings, and then you got this big gap down. Now, what we're wanting to do on a swing trade is ride this back up into around 190, which means getting back above the level it broke down from on earnings.
Right.
So I think, therefore, it wouldn't hurt for us to know what was so bad in their earnings report that made it, that caused this.
Right.
And it's something they have fixed already.
Right. And then because they have their earnings is coming up. They got another earnings coming up next week. I'm not mistaken.
Yeah, it's not showing up on my chart here, which is weird. They usually do.
February 2nd.
Looking it up on Earnings Whisper now. Okay, so that's confirmed for after the close on Thursday, February 2nd. So a week from tomorrow. That's kind of a drag.
Yeah.
Because it doesn't give you a lot of time, right?
No, it doesn't. So it's kind of like either it's like, like based off of analysis, it's like, I'm bullish on this, and it's like, also you have earnings. And so
if you wanted to play this or even just paper trade it, you've got something to work off of here. You got these two highs here, right? They're very close together. In fact, actually, let's change this to a 65-minute chart. Let's zoom in a little bit here. I actually like this. So on a 65-minute chart, you got a little bit of a gap here. You've got poked up into it at the end of the day and then came back down.
Yep.
I would say you could key off the high of this green candle here. And remember, this is 65-minute chart, or that high there.
Gotcha.
Which will have been the high of the day. And which is, again, moving into that gap. Because I think you could kind of like front run this just a little bit. You want to have a really tight stop on it, though, if you do this.
Right.
So there's, well, that gap was actually like down to here. but it's, you know, it's all basically been filled. So, because I think if it goes back up in here, it could have some momentum, and maybe has enough momentum to take it up into that other gap and up into this resistance zone. And if it, you know what, I mean, if you're buying it here and it fails at this resistance zone, you know, maybe you just trail this all day long with a tight stop. You start with your stop just below these moving average, and remember, these are not daily moving averages anymore.
Right.
You have your stop down here. Where are we at here? Ooh, 154. And the ATR on the daily is like 6%. Here it's 2%. Just want to see what the ATR is on a 65-minute chart. So it's about $3. Yeah, you kind of got to go below there. So your stop has kind of got to be like
148
right here. We're like 148.90 ish.
Yeah,
I think 148.83, somewhere in there. But that could be, if you're confident in this move, and you know, and the market's looking good, and you think this is going to go higher, that would be one way to play it early.
Yeah.
But
And
you are playing it early, and that's why you kind of got to use really tight stops on it.
Right. And even, I mean, looking at the 65-minute chart, I saw like it kept touching, like it just wants to bust through.
Yeah, I think so. It does. You know, I agree. It does look like it wants to get up and through there. And you know, maybe you're just better off playing the market. Maybe you're better off playing SPY if the market goes right.
Right.
But this could make a nice move too.
Yeah.
But I do feel pretty strongly though that it's going to need help from the market.
Yeah.
You don't want to take this play if the market's not going up.
No, it makes sense. Makes sense for sure. No, thank you. I appreciate that.
Yeah, no problem. Yeah, I mean, it's good. I think you know, you said there's one you were watching in particular, and I'm glad it was this, because there's stuff going on here. There's definitely nice technical stuff here. So you picked a good one.
Thank you.
Yeah, you're welcome. Anybody else got anything you want to look at? I notice NS. I want to say hi. See you managed to make it in. Whoops. It's good to see you here.
What's up, Kevin?
Hey, Justin. How's it going?
Hey. Good. So I'm actually working as we speak, so I can't do the camera today, but I do have a stock.
Yeah.
I was wondering if you take a look at CDMO.
I don't think I'm familiar with this one. Avid Bioservices.
It's a biotech.
Okay.
And
$1 billion company. Okay, it's a fairly big biotech.
So with this stock, I've actually been in it for since like 2020 or maybe even 2019.
Oh wow.
And so I have like a huge, not a big position, but I've had like a core position, and because I've been in it for so long, I've begun I've tried trading a portion of it every once in a while, you know.
Okay.
And I'm gonna take a little screenshot and try and
Wow, this company's been around a long time.
yeah.
88.
I don't know, because I'm on my phone today. I don't know how I could send you my stuff like I usually do. But anyways, yeah, like I'm curious to hear what your thoughts were, because I have been holding it for a long time, and at one point it was $20. Like I think my CB is like $5, but at one point it was 20, and then it came back to 10.
Okay.
And then now we're around 15, where we are right now. Yeah.
Okay. It's interesting how, you know, these levels from decades ago can come back into play. You know, you can see, you know, in here, like there. But there's just, there's a zone right there, and that has come into play quite a bit. So what are we looking at here? 31 to 37 area. So major resistance up there.
And you were talking about gaps earlier. I did. I don't know if you could find it, but I think in the beginning of December,
Okay.
I'm pretty sure it was on their earnings or after their earnings. It gapped down pretty crazy.
Okay. Yeah. Let's go in there. I just I was seeing the stuff on the chart, and I think this zone is. I'll just move this up a little bit. Pretty important. I mean, it's had a lot of price action on there. Both this one up here and then this one down here. So I mean, you're in this long term, so we should be looking at these very long term charts as well. These very long term kind of levels. All right, so guess we got to get the downtrend in here as well. Then we'll move back to whoops. Move back to daily. All right. Yeah, so it's having a little bit of trouble with this trend line there. All right, so go to the daily. And is this the gap here you were talking about?
Yeah.
Closed.
So actually, I ended up trading that gap with some additional shares. Like I bought some more shares on the bottom of that.
Oh, cool.
It filled it one time, and then it came back down, and I bought it there.
Okay.
And then it consolidated sideways for a little bit, and then went all the way up.
Yeah.
And then I ended up selling a little bit more than half of that position.
Okay.
And then now I'm still kind of holding on a piece. So I made a little bit of profit, and I'm holding a little piece of it. And I was wondering, because today's candle is kind of big, I was considering if I should just get rid of the last maybe 35%.
Of your trade or your investment?
Of my trade.
Okay. Yeah, I think.
Sorry, I know it's a little confusing.
I think you should probably consider that. This is not good. I mean, look, no surprise that it gapped down. Market gapped down, right? Everything gapped down, but it kept going down.
Yeah.
Why? Why did it not recover? Now, all that being said, look at this. We've got the 100-day and the 200-day moving average there. I don't know. It's hard to say if anybody cares about that. It kind of looks like maybe they care about those.
Yeah.
So, you probably want to give this half an hour in the morning. If it's not recovering after the first half hour, then maybe bail. Or,
all right.
Or it doesn't bounce right there. That level. Yeah.
And even with my long-term position too, like I said, I bought this in 2020, 2019, and back then, I was just starting to get interested in the market. So this is kind of one of those stocks that I bought with limited, investing knowledge.
Right.
That kind of worked out for me, and but now I'm figuring considering what I should do with it. I've been holding it for so long, and I wouldn't want to like I said, at one point it was almost at 20, and then we went back to 10. So at one point I was up 300%, and then it went all the way back down to 100%, and then now I'm a little bit. I'm at the 150 range. So I'm just considering maybe exiting and taking my profit.
Well, I mean, it does seem to have bottomed, and it seemed to have. It's put in a nice bottoming pattern here, right? But is it? And it's trying to break through that. If it, if it fails here, I don't know. Where do we come back down to? I mean, maybe you come back to the top of that former gap. You definitely you don't want to see it be coming down into this consolidation or below that consolidation there. That's a fairly long ways away. What are we at? 16? Down to these lows here would be 11. Yeah, you don't want this to give back $5.
Yeah.
Because there are probably better opportunities than this. You know, this isn't the
that's
looking chart in the world, but it's not terrible either. Just don't like today's price action. I actually want to look on an intraday on this. Yeah, look at that. It just ground down all day.
yeah.
Or I mean, it tried to put in support here, and then just it failed. You know, not surprising that it went down quick after that.
Right.
But at least at the end of the day, you know, you can see there's it came in, and then, you know, here late in the afternoon, the downward momentum slowed. It had one more little push down, and then you know, it seems to have found a bottom. So this could recover tomorrow. That would not be beyond the realm of possibility. Watch this level here, 1640. Watch that tomorrow if it does recover.
Okay.
Probably run into a bit of resistance there. So that would be important. If you know, like tomorrow, if it goes up, you know, say it goes up there, you know, blah blah blah, and then stalls out here, that's fine. If it rolls over and just, you know, starts looking like a downtrend, then you got to get out, right? So
Okay. Yeah, that's exactly what I was thinking. Yeah.
So one of the ways you can do that, you know, if it did kind of an uptrend thing tomorrow, your first warning would be, oh, that uptrend broke, and then your second warning would be, uh-oh, it broke down out of the consolidation. If it starts moving fast here, you want to be out of this thing by here, right?
Okay.
That's if you're able to hang on in the morning, and that's for the trading piece, not the other piece. Sure what to do.
Yeah.
No, I'm not totally sure what to say for the investment piece.
Yeah, me neither.
I mean, you just don't want to give back too much more of it. If it starts, you know, if it breaks down below here, it probably goes lower. Does it find support here?
Yeah. I think for me too, it's just one of those situations where, I'm sorry, I didn't mean to interrupt.
Sorry?
I was just gonna say, it was just one of those things where, like, I got kind of lazy watching it because I was up so much, you know, like my cost basis was so low.
Yeah.
And then it's just like it was one of those stocks where, you know, 1 week I was looking at it, and then 5 days later, I'm like 20, you know, almost 30% less.
Right.
Wow.
Yeah, I mean, you know, it's funny. We all have a recency bias. If you had just entered that stock, there's no way you would let it pull back that much, right?
Right.
You would have been watching it like a hawk. But because you've been in this so long, you just kind of stop watching it for a while, and you let it moves that are much bigger than you'd let anything else make. And this is. So, I mean, most people would say that's exactly what you want and need to do as an investor. But you're also a trader now. And letting a stock do that becomes really difficult. And I think unnecessary to a degree. Because your skill levels as a trader get to a point where you go, you know what? I mean, this thing is rolling over, and this could be going down for a long time. Yeah, it's an investment. Yeah, I think it's a good company, but this chart's telling me that you know, people don't like this anymore. So, you know, they're jumping ship. You should probably jump ship too. You can always get back in it later.
Yeah, that's true. And, you know, it's also kind of just tough to finally actually sell it as well, because, you know, seeing that low CD is just so pleasing to look at.
Right.
So
I know. It's yeah. I mean, so, you know, right now, I mean, you're sitting on a triple on this, right? And it's it's nice to see that 300% gain sitting there. I get it. But yeah, I mean, sometimes we just got to get out, or sometimes, you got to peel some off.
Right. Well, okay. Thanks, Kevin. That was very helpful. Appreciate it.
Let me know how it goes.
I will.
All right, cool. NS, have you got anything for us? You get your mic working?
Yeah, I'm back. Kevin, can you hear me?
Yeah.
Okay, awesome. Yeah, I just had some trouble with my microphone there. So I have a couple. Shopify, although I don't want to kind of own the stock, I think Shopify was something that I was looking at to trade. I think I saw like a double bottom and then a breakout with a good volume, or probably a head and shoulders, right? Like kind of looks like a head and shoulder.
Sorta. Are you looking at? Would you be looking at the U.S.?
Oh yeah, I think I'm looking at the U.S. one. Yeah.
Because they do look different a lot of the time.
Yeah, because of the exchange rate, is it?
Yeah. I own Shop, but I've got it in my I've got it in my TFSA, so I've got the Canadian version.
Got it. Yeah.
Right. So okay. Yeah, look at this level right here. Interesting. So let's I'm just gonna draw some lines because I don't have any lines on it. Nobody's asked me for Shop before, which is really weird. Yeah, these every $5 in this stock. You see that? It's just like, yeah.
And it's been in this range for a while now, right?
Yeah. It's because it's got a lot of institutional interest, and they just think in even numbers like that. Okay, so or a head, or a shoulder, head. There's kind of there's no right shoulder though, really.
Yeah, I was looking at the middle portion as the head, and the other side of it as the other shoulder. Although I don't know if
So is this the head right here?
No, I would. That would be the right shoulder. So the left shoulder is all the way on the other side.
Okay,
I mean, it's not exact, maybe.
Yeah.
But I'm just trying.
And it's more of a longer term.
Right.
Yeah. Okay. I see what you're saying now. Okay. So, oops. Shoulder. Head. All right. Actually, thanks for pointing this out. I like this. Actually, I like this a lot now. Okay. Let's get a measurement on that. Yeah, it's a lot clearer on the weekly.
Yeah. I was looking at kind of zoomed out. I was looking at the daily, but I was I was still not. Yeah, I probably didn't switch to the weekly. This looks even more perfect. Yeah.
This is 90%. Damn. Well, I don't know if it's going to move that much.
Yeah, that would be crazy.
I should probably unlog this thing if we're going to be measuring. Oh, where does that take us to? Actually, no, this is totally doable for this stock. So, okay, so that measures out to basically a double from the breakout point. Because that takes us up into, and that still only takes us up to the 100-week moving, average, right, in around 86. All right, so let's move over to a daily. Yeah, this is interesting. It's funny because we were just talking about with Justin, right, about how you got these stocks that you've owned forever, and and you just kind of take your eyes off and don't look at them. And I haven't really looked at I haven't taken like the bigger view of Shopify for a while. I know it's been consolidating for a long time and everything, and I just kind of haven't wanted to look at it. But now that I am looking at it, in detail again, I'm much happier, with what I'm seeing than the loss that I'm seeing on it in my portfolio. Because I mean, obviously, we've had this downtrend, but this downtrend broke quite a while ago. It's been in a beautiful base here, and like you said, the head and shoulders bottom on there, really good basing pattern. Yeah, I mean, this is clearly stage 4 decline into stage 1 accumulation, and now what looks like the very beginnings of a stage 2 markup. So yeah, long term, this looks very positive.
I'm not sure when they're reporting earnings, though. I think that might be the only thing.
Soon. eSignal is saying
15th.
February 15th. So 3 weeks. Let's see if that's confirmed or not. Okay, so February 15th, pre-market. It's not confirmed yet. So what's your plan here? What are you thinking?
Yeah, I think I was looking for more of like a 2 to 3 weeks timeline. I'm a little worried about the big tech earnings coming up next week, Apple, Google, and all of that. So maybe just play till that point and then maybe get out.
Okay. Yeah, I wonder how much people understand what happened today. Do you know the news today? Did you pay any?
Is it about the stock exchange, the trading cancellations?
No. In Shopify specifically.
Oh no, I don't know of any news from Shopify.
There was big news. So Shopify raised prices significantly, which is really interesting and got everybody thinking like, so here's the deal. If a company coming into, when you've got all these companies laying people off, saying, they're looking at slowdowns, and I'm talking tech companies here, right? Of course. And then Shopify is confident enough in where they're at, and confident enough in retention of their clientele, and going out and getting new clients, that they can raise prices a lot right now. That is either, on their part, that's either insane, or it's showing us that this company's in really good shape. And the services they're offering are still very much in demand, which is a bit of a surprise to the market, I would say, which was why there was such a big move up, and a move up. And remember, when this was gapping up, the market was gapping down, right? This gapped up and went up when the market was going down. Look at this intraday, right? So this is where the news came out in the morning, and boom, it starts going up, opens, goes up some more. Interesting that it started to pull back around the same time that the market actually was starting to turn, but then it did turn back up again and continued higher and closed very near the highs. So what we're seeing here is a big fundamental change for this company, I think. And I think it's also got the market thinking that we're going to see really good things out of earnings coming up. So I think this move continues higher over the next couple of weeks into earnings. So I would say, if you want to get in this, you got to find yourself an entry, maybe an intraday pullback tomorrow. But yeah, I
think that'll be really good if there can be like a confirmation of that breakout, right? Like it comes back and then you get in, right?
yeah.
Okay.
But I don't think you want it to come all the way back. Like, I don't think you want
Okay.
it to come to here. Here, maybe.
Okay.
Let's see if we can find a spot on this intraday chart. Yeah, here, like there. Or maybe down and around here. So I would just take this intraday chart and mark up some of these zones and see how it behaves there. So obviously you're gonna, you should have strong support right there. So I would put a line right there. Because maybe it gaps up tomorrow too, right? So that's a first area where I'd be looking to see how does it react if it pulls back to here. What happens? Does it just pull back and then go right back up again? Well, then you kind of got to buy that, right? Then a zone that you want to watch is all of this, right? So basically, the top and bottom of that. And then, what sort of goes along with that is these highs here, or maybe this level right here, actually, this 46. Somewhere around here is another level that I would watch out for. So these are all places where it could see support on any sort of pullback. And then I think the last one would be right here. Yeah, if it goes below 45.50, I don't think I'd be interested in it anymore. Because I think, when down here, 45.50, it's pulled back too much. Anything below that is too much.
Got it. Okay.
Cool. Yeah, when I saw that gap up this morning, or when I saw the news, I thought, wow, is that ever strange? And then I had a feeling it would work really well for the stock. I see Marvin has also mentioned the golden cross with the 50 crossing over the 200 recently, just a few days ago, or I guess about a week ago. There. Yeah, I mean, it's obviously, things, the technical picture in the stock is changed radically, over the last few months. Because this was one of the first stocks to start to suffer when the bear market started. This, in retrospect, was very much an early warning sign. But yeah,
right. Yeah.
definitely
Yeah.
big.
Yeah, I think I remember them spending more money just at the beginning of all these rate hikes and stuff. I think, and that's where I think it spooked everyone.
Yeah.
The stock. Yeah.
But yeah, I would say again, even if you're going to swing trade this, go find the press release or whatever on this price increase, and give it a little bit of a read, so you're familiar with what's going on, because that is a major catalyst right now. That's a major catalyst coming into earnings.
Yeah, I did not know about that, so good to know. I think I'll give that a read as well. Yeah.
Cool. And yeah, thanks for pointing out the this Head and Shoulders, because yeah, just looking at a daily chart, I would not have seen that, and it's so obvious to me now. Well, it's one of those things. Once you've seen it, you can't unsee it, which is awesome.
Yeah. Yeah, I think I have one more, unless there's anyone else.
Yeah, no, go for it.
Yeah, the other one was, I think, I mean, I'm mostly doing tech stuff, but
It's fine.
Qualcomm.
Okay.
Qualcomm was another one. And I think kind of, I was looking at it more. It's not perfect, but kind of a double bottom. Broke out and then retested, I think. I don't think it's perfect though, but
yeah, it's not bad though. Yeah. I'd actually call it a triple bottom. It's not totally clean, but it's kind of here. You know what? Actually, here, I'm going to do this way. you know, because really it's a bottoming zone that's like that wide, right? But there, you know, there are definitely 3 distinct bottoms in here, and it's come off of that, and it's now made a higher high. So you've got, you know, you've got your higher low right here, and now higher high. That's really good. You know, it's had a failure out of a base. We've seen this particular base around this time in a number of stocks. Failed out of that. You know, had another nice little tight base here. And then a nice strong move out of that. You know, strong move out of there, a couple of consolidations along the way. You know, and so it is stair stepping up. This is a strong move out of here. And now we've got a gap though. So, you know, today's pullback didn't even get to that gap, and I think this is going to go higher without looking at that gap, because I think the market's going higher. This is actually a, you know, a similar look to if you go back and watch the recording, because I know you weren't here earlier when I was going over the market. But if you watch even just the part that I did on the indices, you'll see I talk about this pattern here, how strong I felt the price action was in all the indices and a lot of the sectors and stuff, and how I will be shocked if we don't go higher from here. And yeah, so this is very similar. This is kind of like, you know, this is definitely a market stock showing similar price action. So while I think it's going higher, I think that, you know, this is kind of a low beta name, right? I don't have beta up here. You know what? I want to have beta up here. Oh, wow. Actually, that surprises me. Beta is 1.22. So that means, you know, for every dollar that the market moves, or for every dollar the S&P 500 moves, this should move like $1.22. Or sorry, every 1% that the S&P 500 moves, this should move like 1.22%. I'm surprised. I thought this would be around like 0.8. So I was surprised it has a higher beta than the market. But yeah, if you know, if the market goes, this is going to go. I just wonder if there's better plays in this one.
Got it. Okay.
Like, I think Shop would be a way better play than this one.
Got it. Okay.
And I think that the stock that we were looking at for Marvin, it could be a better play. What was one? Oh, Team.
Oh yeah, Team. Mm-hmm.
Team. Mm-hmm. Yeah, I was watching that.
Yeah, I kind of like.
Yeah, but would you? So on this one, you would wait for that to break above to really get into it, right? Or would you actually front run this?
You know, normally I would wait. Normally I'd wait till we get up above, you know, this area here, you know. Okay. But given the way things are kind of working lately, it makes me kind of want to front run this. And you know, this looks like a decent entry right here. So I would give strong consideration to entering this. I'd kind of be watching what the markets are doing in the pre-market. And I'm looking at the futures now, and I'm looking at them pull back a little bit, which is kind of a little bit surprising. They were doing strong. Makes me actually want to look at Tesla and see if that's pulling back.
When I looked at it, it was up, way up actually.
Yeah, it was. Okay, good. Yeah, Tesla's holding on. I'm looking at the NASDAQ futures. Not much of a pullback, actually. That's fine. See, they went up. they pulled back a little bit after, and this pullback with Tesla, right? They pulled back after the equities markets closed, went sideways a bit, and then shot up as soon as Tesla, probably when Elon started talking, shot up nicely there, but and have pulled back a little bit since. That's okay. So yeah, like I said, I think markets are going higher. Watch that beginning of the video. Even it's just the part where I do the indices.
Yep. I'll watch the recording.
Whoops, not team. QCOM. And how much time you get? You know what? And you actually you've got like way less time on this too than on. Oh, hang on. How much time do we have on team? It was shop. We've got 3 weeks. Team, I think we only have a week as well.
Yeah, it's next Thursday. Yeah, for earnings.
Okay, which is I think the same day as QCOM. Oops. Yeah, QCOM would be on Thursday as well. So same amount of time. Yeah, I don't know. I don't know. For some, I like the other one better. I like team better than this, and I like shop better than this.
Yeah, there's actually one more, which
Okay.
again is Wayfair, which is also was something that I was looking at. Basically, I was looking at things that have sold off a lot just because the small cap, or sorry, the small and mid cap sector looked like the ones that are really going to push higher. So because they've sold off the most, I guess.
Yeah, they got hurt the worst.
Yeah, and I think Wayfair is actually pretty good stock to own as well. I think I don't know why it sold off so much. I need to go back and look at it, but I think it's a pretty decent stock to own, I think.
What about in a recession, though?
Yeah.
People gonna buy? Like I don't shop at Wayfair. I'm not totally familiar with what's there, but isn't it mostly like furniture and stuff?
Yeah. I think it could also be because of the housing market that they're expecting to slow down. That probably just they sold off way ahead.
I mean, it's a nice, it's similar to shop in a way. How it's a nice break through the downtrend line. It's definitely basing, no doubt about that, right? But is it ready to go? And I kind of wonder. Although, there's still, the move from, look at this. I mean, it doubled off of this low in what, the last month? That's a big move. I think this needs to consolidate more up here before it does anything.
Yeah.
And this one's probably about, this is about 3 weeks to earnings, 4 weeks, 3.5. Yeah, I mean, it could break through here, but I don't think it's going to last. I think it needs to consolidate in here for a while. I think you need to do similar price action to this over on this side. So that, when you look at that on the weekly, it kind of looks like that head and shoulders thing, right?
Yeah, just like shop.
Look, like take a look at this, right? And then we'll take a look at shop. Bring that back up, okay? And you see how there. That's where I think Wayfair is right now. Is here.
Yeah, makes sense. Yeah.
So yeah, that means more sideways consolidation, especially if thinking if anybody or if the market is thinking like I am, and it's like how well will this company do during a recession? So, and what happened in the last few days? What happened a week ago? Look at this huge volume and the big gap and everything. A bunch of gaps here, big move up. I would want to know what happened. I vaguely remember hearing something about this company, but I wasn't terribly interested in it, so I didn't pay much attention. But it does kind of look like there has been a fundamental change. So maybe, maybe that fundamental change is strong enough to kind of override what I think should be a consolidation in here and take it up to the next level. Maybe the consolidation happens up in here, in which case, I mean, this would be a nice play. From here, from 60, you could get it from 60 to 75. I mean, it should go to 75 fairly quick if it breaks out above the 60. So I don't want to scare you out of a play, right? But I just think you need to have layoff announcements. Okay, thanks, Marvin. Marvin says that surge 21% following layoff announcement, and we've been seeing a lot of that, right? Stocks that are jumping up when the companies announce layoffs. But I don't think that's enough. I don't think it's enough to make it continue, right? It's like, all right, your expenses are down. Yeah, we can step up a bit because you have fewer expenses. The expenses are lower, but that doesn't address revenue issues. That doesn't address anything to do with a recession. I mean, well, I guess in a way it does, right? It maybe it's probably telling us that management thinks that they're going to be affected by a recession, and they are being proactive about it, which is good. I mean, that's a good sign. It shows you that there's good management and they're not afraid to take big action. But it's not. In my opinion, that's not enough to take this higher from here. I'm sticking to my opinion that this needs to go sideways more. Yeah, Marvin says, yeah, they cut 10% of the workforce, and that is a pretty big number. So hands off for a bit in this, probably a few months. But keep it on your radar. Maybe put an alert above 60, and see if when it finally breaks out of there.
Sounds good. Yep.
Cool. Any other questions, anyone? If not, I think we'll shut it down.
No, I guess I just have a quick question in terms of when you talk about like recession, and I wonder, I haven't looked except when you start talking about like the 10-year yield, and I started to kind of look, because I know one of the big things that I read on some articles, they were talking about like the inverse, I think, of the 10-year with like the 2-year and the 3-month, and
right,
and
the yield curve.
The yield curve, and it's it hasn't quite closed yet, so I guess like what is that I guess a still strong indication that that the economy will shrink consecutively to say, all right, yep, recession for real.
Yeah.
And how long? But then also on the flip side, I think I follow on Instagram Wharton, is University of Pennsylvania, like School of Business. And they do like, I guess I can't remember if they call it market minutes, or they have pretty sound and professors who do this on the daily in terms of studying markets and stuff. And a couple of them have also said like they're like also cautiously optimistic, because they don't. I guess their rationale is that often when there's so much doom and gloom, that sometimes that they're saying they're still cautiously, but sometimes it doesn't turn out to be as bad as you per se, as people always perceive within the media. But they said we'll see. But I was just curious about that in terms of that inversion, and you like your thoughts on that.
Right. So it's really good at I'm trying to find, actually maybe that one's better. Yeah, okay. Oh, that's not good. This one. Okay. So this is the 210 yield curve. All right, and you can see anytime it's below zero, this black line here that's a inversion. Okay, and I think just about every recession has been preceded by a yield curve inversion. However, not every yield curve inversion has resulted in a recession. And the recessions usually come, I believe it's 6 to 18 months after the inversion. Okay, so you can see that we are quite inverted here. We should probably be having a recession. This is why everybody thinks there's going to be a recession. Now, it's not foolproof, but it's pretty good. And you can see, cases in the past. Oh, by the way, the shaded areas are recessions. Okay, so I do want to point out, though, that, look how long it was between here, before there was a recession. The yield curve, stayed inverted for a long time, and then there was a recession, and it was a very short recession in 1980. There's another one here. This one here. So this would have been in, I think it was like 98, and the recession didn't happen until like, what was it, 2002 or something, 2001, 2002. So that one didn't work, that signal there. But this signal here, yeah, that one worked. Here, you had like early signals that didn't really do much, and then later there was a recession. So it's the whole timing of the thing is difficult. It can be quite some time until there's a recession and there are false signals. But the market does really pay attention to it. And unfortunately, recessions are usually caused mainly by sentiment. And, we are seeing negative sentiment. We are seeing companies lay people off because they think there's a recession coming. And when everybody does that, then it's a self-fulfilling prophecy. They create the recession.
Yep.
So it's kind of like why the Fed never really wants to say the R word, right?
Right.
Because they're afraid of creating one. Except this time, it almost seems like they do want to create it to get inflation under control. Now they seem to think they can have a soft landing. They seem to think they can get inflation under control, and then bring rates back up. And not throw the economy into recession. We'll see. I'm skeptical. I think most people are skeptical.
I think even the Feds are skeptical, and I think they're just like, we're gonna do whatever it takes. It's like that's how I kind of feel like it was first. I feel like it's very hawkish on this soft landing, and then it's like we're doing whatever we're gonna take to get this recession and to get this inflation down. And yeah, it's kind of like, oh yeah, just leave the door open. Why don't you?
Yeah. Yeah. I mean, it's their mandates inflation, price stability, and jobs. It's not necessarily a booming economy. If they can have full employment and price stability in a crappy economy, that they would be fulfilling their mandate for the most part.
And do you think that even, and I guess the last follow-up question, I know that, and I haven't checked recently, but I know, like, I don't know if it was last week. I think it was last week. Yeah, it was last week. There were these interesting talks about within America in terms of on the politics side of the house, in terms of America defaulting on some of their payments potentially if Congress can't do what they need to do, either to raise the debt ceiling or come to some type of agreement. And I know that's kind of like uncharted waters, because I think in recent years, it got to that point, and it still could be the case now. You know, there's this talk, and then people are very hawkish on their on their beliefs and what they're standing on. And then when it gets to a certain point, somebody kind of plays nice and gives in to other sides or whatever the case may be. But I want, I'm curious as in terms of how, I guess, in recent, or I guess in past, I guess how the market also would respond to that. And I wonder if that's even, I guess, will further support this self-fulfilled prophecy of a recession.
Well, it can, certainly, because it's uncertainty.
Mm-hmm.
But I think the market, is smarter than the general public, and we've seen this stuff before. And I have seen, over the years, the market become less sensitive to this stuff. I remember. I'm trying to think of when it was. 2018 maybe. Wasn't there a lot of messing around in 2018?
Mm-hmm.
Also earlier in 2011, 2012, something like that. I remember there was lots of talk about raising debt limits and that sort of thing. And the market was extremely sensitive to it. But I've noticed that over time, the market has become less sensitive to it because eventually, so I have great faith in the American people, because you may have to drag them kicking and screaming to it, but eventually they will do the right thing.
Right.
It's just such a painful process getting there sometimes.
Yeah. Yeah, for sure.
And that's where we're in now, and the market is aware of this. The market is going to have little tantrums now and then, as these lawmakers have little tantrums. But I really think that it's not going to be as bad as some of them were in the past. And I don't think anybody really believes that the U.S. government is going to default on their debt.
Right.
They're going to figure it out eventually. So.
Thank you for that. That's helpful.
Yeah, just just look at history. Look at the history, because you probably, I think if you're a normal person, probably didn't pay much attention to this stuff in the past before you were an investor, or before you were a trader. But now you probably do pay more attention to it because you think you need to, because it does affect markets. And so it seems more serious now than maybe it would have in the past. Does that make sense? I mean, can you think back into the past, how you would have thought about this?
Yeah, I mean, I think if anything, I think in the past, would have probably been most like, everyone else, in terms of you have your talking heads, your political talking heads, your correspondents, and both would have been alarmed for their reasons, one shape or fashion, or or other rather. And as a result, right, it still causes like this this bit of hysteria, like, oh my gosh, what are we going to do? But and then eventually at some point, I do remember, like you said, around 2011 or so, like that was during Obama's going into his. Yeah, it's like going into at the end of his first term, going into the second term, because that was a changing of the Congress, because you had the Democratic House. I mean, you had the Democratic, you had full Democratic Congress, and then you had the Democratic, executive branch with the president, but then you had a Republican Congress,
right?
And so I do remember there was just a lot of tick for tat, and but then eventually things did mellow out.
Yeah.
But yeah, like you said, it's just as I think as any good therapist would tell you, time heals all. It's just that point of waiting for time to heal. that can, and of course, I guess having to make sure you drown out sometimes, not be so in tune, because you can get caught up in the hysteria too, and
Oh, for sure. I mean, I became a much happier person when I stopped watching the news.
right, and that's everybody's story.
I'm still plugged into the financial news, of course, right? I don't watch news on TV or anything, or financial news on TV. I don't watch CNBC or anything like that. I try to read news, and I try to filter it fairly well so that I don't. I'm not exposed to any of the hype and hysteria and all of that. And I'm a much better, happier person, and I think I can, analyze the stuff without all the emotion and everything.
Very much so.
And you know what? I mean, there's a lot of stuff going on in the world that I just don't need to know about. I'm happier not to know about it. It's, I guess some would say I'm just burying my head in the sand, and that may be true, but I don't know. That's what I need to do for my happiness.
Right.
So on that, I think we will. I think we'll start to pack it in here. What do we got coming up? Okay, so yeah, next Wednesday, no ticker talk next Wednesday. I'll be doing the weekend video coming up next weekend, of course. And then we'll do, so our next ticker talk will be 2 weeks from today. So hope to see you guys there. I want to thank everybody for coming out. And if you've been watching the recording through all of this, awesome. Hit that like button, share, subscribe. And we will see you all again soon. Have a great night, everybody.